Greetings, everyone, and welcome to the latest edition of Legal Bites, the official podcast of Cummings and Cummings Law, where our primary focus is on assisting businesses and their owners re-domesticate out of high-tax, business unfriendly locales like Massachusetts to pro-business, pro-entrepreneurship states like Florida and Texas. Today, I am covering a recent report written by Greg Ryan for Bloomberg entitled Massachusetts Loses Billions in Income After Millionaire Tax. But first, a brief introduction. My name is Chad Cummings, and I am an attorney and certified public accountant serving clients in matters of business, tax, and commercial law throughout the states of Florida and Texas. I am Chief Executive Officer of the multi-state, multi-attorney law firm Cummings and Cummings Law. And in addition to my day job, I also teach business and tax law at the university level. I hold 4 degrees, including 2 law degrees, as well as a bachelor's degree in accounting and a master's degree in taxation, together with 11 professional licenses and certifications covering accounting, tax, audit, and of course, the law. My firm website is www.cummings.law. Massachusetts voters approved a 4% surtax on incomes above $1 million way back in 2022. In 2023, the first year it took effect, residents leaving Massachusetts took a net of 4.2 billion, that's with the B, dollars in adjusted gross income with them. That was an 8% year over year increase in net outflow, even as the raw number of departing taxpayers temporarily declined. The second data point here is the one that matters the most. While fewer people were leaving, the people who are leaving are taking more money with them. Top earners were responsible for 70% of the $4.2 billion in net outflows in 2023, more than double their share from 2019 pre-COVID. The tax is not yet causing a broad exodus of average residents, although that trend is starting to materialize. Rather, so far, it has caused a targeted departure of high-value taxpayers, including many business owners from the state, which is precisely the category the tax was designed to extract revenue from. This is the structural trap that every millionaire tax creates. The revenue base is thin, mobile, and sophisticated. Massachusetts is now collecting more from the people who stayed behind, whilst losing an accelerating share of income from those who left. One individual quoted in the report, who is executive director of the Pioneer Institute in Boston, described the problem directly. The state is trying to make money on a smaller tax base, and that is logically going to get harder as time goes on. Supporters of the surtax point to the more than $6 billion in total collections since 2023, with fiscal 2026 millionaires tax revenue running 19% above the prior year. Now, that number is real, but it only measures what was actually collected from those residents who chose to remain. It does not measure the income that left, the taxes that would have been paid on that income at existing rates, or the downstream economic activity, consumer spending, capital investment, and employment that departed with those high earners who changed their state of domicile. Massachusetts has a natural escape valve that states like California do not. New Hampshire Its northern neighbor imposes no tax on wages or capital gains. The border crossing is not a transcontinental relocation. Rather, for those moving from Massachusetts to New Hampshire, it is only a short drive. Net outflows from Massachusetts to other states like Florida and Texas predate the millionaire's tax and have now been significantly accelerated by it. That is my firsthand experience working day in and day out with numerous clients who have left the Commonwealth in favor of greener pastures. The political response from Governor Healy has been to oppose ballot measures that would cut the state income tax from 5 to 4%, arguing that the reduction would create a multi-billion-dollar hole in an already tight budget. That argument treats the existing revenue projections as stable, but that is a fallacy, and the IRS data suggest to the contrary. Several other states are watching Massachusetts and drawing the wrong lesson. Washington State is considering enacting a 9.9% millionaire tax. New York City is pushing for income tax increases on residents above $1 million of annual earnings. California is weighing a global tax on wealth, not income, but wealth, with an unrealized gains component. Each of these states and others are looking at the gross revenue Massachusetts collected and concluding that the policy works. Unfortunately, they are wrong, and none of them are adequately accounting for what Massachusetts lost. The correct question is not how much a millionaire tax collects from the people who remain behind in the Commonwealth. Rather, it is how much total revenue the state would have collected if the tax had never been enacted, compared to what it will collect over the next decade as the high earning population gradually reallocates itself to jurisdictions that do not impose personal income taxes or surcharges on success. That comparison, well, frankly, I think you can do the math yourself. But the direction of the IRS data is not ambiguous. People are leaving the state. And again, that's exactly what I am seeing firsthand in my law practice. If your income puts you in the category that Massachusetts is targeting, or the category that Washington State, California, or New York are targeting, the IRS data confirms the behavioral economic prediction, which is that people with the means and ability and appetite to leave are doing so, and their income is moving with them. If you have questions regarding redomesticating your existing LLC or corporation, please use the link in the description for more information on this nuanced process and to schedule time for you and I to speak about your specific situation. Again, my name is Chad Cummings, and I hope that you found this information useful. As always, the information in this presentation is general in nature, and it is not legal advice, because legal advice, by definition, must be specific to a particular set of facts and circumstances. Should you have any questions regarding this information or the content of any of my many earlier presentations on this same topic, please visit my firm website at www.cummings.law, not .com, but .law, to schedule time for that consultation. I look forward to the opportunity to speak and perhaps even work with you very soon.